Hey guys, welcome back to the channel. Thank you so much for jumping into another video. My name is Josh and I am just your average Joe day trader. Hey, if you're wondering what this channel is all about and it's your first time visiting with us, my job in this channel is to help you understand what are the best day trade stocks. What stocks do I use for my personal day trading journey? What do I believe based on my opinion, not financial advice, are stocks that you also could get in and out of with me every day to make money. For example, APLD, Applied Digital, is a stock that I trade daily and I make at least $100 per day in APLD in each of my day trading journey days. Now, you're probably thinking, what about if the market goes down? What about if the market's going up? It doesn't matter, guys. If you're a retail day trader and you understand your support and resistance levels and you understand how to read candlesticks, you can day trade any stock and make money at it as long as you are educating yourself and moving forward to understand those support and resistance levels and what the candlesticks are telling you. So why are we here? We're here because I have basically stated as part of my channel, I want to continue to help everyone that wants to be part of this channel community with us. I am creating a playlist, and this is the third video, talking about different candlesticks and charts and what they look like, what to look for, and how to understand them. It's up to you to take this information and go back and watch it 20 times if you need to understand the candlesticks. Go to actual stocks that you trade and look for, in the previous day or previous hours, look for these candlesticks to identify and see so it makes sense for you. So welcome back. We're going to go right ahead into the third training video. And this training video, we're going to be talking about the hammer candlestick. So what is a hammer candlestick? Okay. Well, first of all, candlesticks derive from basically Japanese candlestick patterns. So the hammer is a Japanese candlestick pattern used in technical analysis to signal a potential bullish reversal after a downtrend. The primary function is to indicate when a downtrend could change to an uptrend. We're also going to talk about the reverse of the hammer candlestick, which is the inverted hammer candlestick, which basically talks exactly about the same thing, except it's going to signal for potentially the bullish reversal. The inverted hammer actually is going to give you the same idea as the hammer candlestick, except inverted is going to basically signal a potential bearish reversal. And we're going to get all into that in this training video today. So let's take a look here. You see that a hammer forms when the body is small and near the top of the candle. So if you take a look here on this little chart I put in here, you see that there's a long shadow. Okay, whether it's bullish or bearish, and it's at least 2 to 3 times the body, okay, the size of the actual candle. And there's little or no upward shadow. So your bullish or bearish, or the hammer itself, is going to form up top here, and it's not going to leave any wick. You should not have a wick on a hammer candlestick. And it usually appears after a downtrend, which does signal that potential bullish reversal, or in the inverted factor, signals for the bearish reversal, which you'll see in additional slides. Now, that hammer candlestick is very easy to identify because of that distinct shape resembling a hammer, and that's why it's called the hammer candlestick. Now, the hammer often appears as a green candlestick, but it can also appear as a red candlestick, which is why I put both examples here on this slide. The key aspect to keep in mind, guys, is that the pattern should still resemble a hammer. So whether it's going to go into a uptrend, bullish, or a downtrend, or inverted bearish, it still is going to represent that hammer. You should always see that hammer candlestick. And the small body is formed because the opening and closing prices are now close to each other. So after there's significant buying pressure from the lows of the candlestick, the signals that sellers are losing momentum, with the buyers aiming for the price to push it higher. So again, the hammer means, and it shows that the sellers pushed the price down during that trading session. and the buyers were fighting back. Remember, we're in a war. Every candlestick has a war. Buyers and sellers are fighting to either push it up or get it to go back down. And the buyers are fighting back strongly on that hammer, pushing price nearly or above the opening level by the close. And this rejection of lower prices indicates that potential buying interest and that possible trend reversal. And you're going to see that in a minute on the charts. So a inverted candlestick, the inverted hammer, looks just like the hammer, but flip it upside down. And now it has that long upper shadow, which you can see here in this picture. And it also signals a potential bullish reversal, but with slightly weaker confirmation. So for example, you have the price moving down. We've got these full 2 red candles. We have the inverted candle green, which means that the sellers are losing the battle and the buyers are about to take over. And you now run into a second green candle on the up, and the price continues to move up, where you have 2 full candles. Now, here's the thing about the hammer candle. Whether it's at the top and it's actually a top hammer, a regular common hammer candlestick, or the inverted, which is flips upside down, you should never make a trade decision based on the hammer alone. You want to wait to see what the next candle does. Now, I usually trade in the 1 and 5 minute time period so that I can make good ins and outs of my trades. But when I'm in a trade, I'm usually monitoring the 15-minute and 30-minute candles so that I can see what's actually happening. Because if you sit and get into a trade and you buy in a trade and you're in the 1 minute, you're going to drive yourself crazy. You're going to see it green, red, green, red, green, red, and you're going to have no idea, is this the right time to get in or get out? So once you're in the trade, because you see that the momentum of support and resistance and the candlesticks are showing that pattern of green, you get in your trade and then you flip over and switch. And again, this is how I do it. This is just my advice, not financial advice, my opinion. You get in and now you're watching the 15-minute or the 30-minute to see that candlestick stays green. Okay. That's my strategy. That's how I do it. With the inverted hammer candlestick, when I see that flip upside down and I see it's green, I'm not making a decision based on that inverted flipped hammer, but I'm going to wait for the second candle to open, which you see here. The second candle opened and it ran strong green. And now I know, okay, there's upward momentum. It looks good and the price is moving up. So now I'm going to jump in, probably either within this candlestick here before close or at the opening of this candlestick, jump in. And yes, guys, it may be here that say it's a $5 stock. And by the time you get here, it's $5.03. By the time you get here, it's $5.05. And when you get here, it's $5.06. I totally get that. Okay. And if you're like me and you're trading 1,000, 1,500 or more shares each time you get in and out of a trade, a penny means a lot. A penny could be $5 per penny. It could be $10 per penny, depending on how many shares I bought and how deep I am into that trade. So I totally understand that. But guys, make sure that you are waiting for that second candle. Same with a hammer. If the hammer, and let me see if I can go back, with the hammer and it's, okay, red, you want to watch and see before you sell, is it going to go to the downward trend and hit that next red candle? And yes, you may lose a little bit. But guys, I've told you in many of my videos, make sure you have a trailing stop loss. Very important when you get into trades that not only do you have a goal for where you want to get to and you're monitoring your candlesticks, but have a trailing stop loss. So guys, if it turns around and flips back down the wrong way and it starts running against you, you don't lose everything that you made profit on. Because if you have no stop loss, chances are it turns around and runs down, you may be completely out of the game and lose money. Now, there's a lot of stocks, APLD for me, I don't set a stop loss on those stocks because I know the pattern. I know the trend. I've monitored it over 30 days and I know exactly what it's going to do. So I may not set a stop loss, but if I'm in the trade and watching the trade and I'm reading the candlesticks and I know where my next support level is and it's going to hit that support level and starts to reject, usually I'm in good shape and you could be too. Again, please don't take this as financial advice or trading advice. You guys need to learn how to do this. You need to educate yourself. Nothing is better than a good education in order to be successful in trading. So please, guys, take every opportunity to do that. Hence why you're here and you're learning about hammer candlesticks now. Now, same thing with the regular hammer candlestick, that inverted hammer candlestick formations created when those sellers try to push the asset price lower and are ultimately unsuccessful as the buyers step in to hold up the price. And that's why you have a green inverted hammer stick. The behavior is the cause of three major identifiers for the inverted hammer: the long upper shadow and a small candle body at the low and little to no lower shadow. So you have a bit of a wick at the end, but basically there's nothing there. Now, this is a great example of the inverted hammer example, but it also is going to show you the regular hammer example. So if you see here, price is moving down. So you could almost consider this red line a resistance level, but it's moving down. So this could be your support level here, right? Look where the inverted hammer is at the bottom here. So price is moving down. You come here, kind of hard to see, but this is an inverted hammer, and it's a green inverted hammer. So you know, once we hit the second candle, that is your indication that the buyers are winning and you want to buy right here. This is where Josh gets in his day trade stock every time when I see that second green candle. And look what it continued to do the rest of the day. It ran all the way up and price move up and my cost per share moves up and I take fire profit because my kid said don't ever use fat anymore. So fire profit, guys. Where do you see in this stock right here a hammer? Okay, so let's take a look at this for a minute. This is an actual stock. This is actually NVIDIA, and this is current as of today. So we have, as you run up, upward trend here. What happens when we get to the top? Would you call that a hammer? It's a little bit bigger than a hammer. That's not really the hammer. But as you're working your way down, what do we see right here, guys? Almost the full hammer. You have a bit of a wick up top, so it's not a full hammer. Are there any hammers in the chart? Yeah, you could pretty much say this is your hammer indication of which way that's going to go. And it, of course, once you hit this top part here and now it's red, it's running down. Okay, any other hammers here? Okay, guys, right here, look at this red hammer. But the buyers continue to win. You have this red hammer right here, and the buyers continue to push it up. Guys, listen, this should not be considered financial advice, and this should really only be used as an aid in your trading journey. I'm extremely excited to continue to put these training videos out about candlesticks and about the patterns. I hope you guys go back and watch it a few times, and now go to some trades, some stocks that have already taken place. So go back a few days and look for these different candles, guys. There's 2 other training videos out there I'm putting right here on the screen. We have this one, which is for the dojis, and there's 4 different types of doji candlesticks that you guys should learn and watch the video for. This video, the second one, which is all about the engulfing candles, which is one of my favorites, and the one that I really look for because it's a great indicator for which way the trade's going and whether to get in and get out. And now you have this one, guys, which is all about the hammer or the inverted hammer. More to come. Thank you so much for stopping by. Guys, if you have not subscribed to the channel yet, please subscribe to the channel. Please hit the like button, hit that notification bell so you'll be notified every time I upload a new video. And if you have not opened a Webull account yet, guys, drop down in the link. You can sign up by clicking the link for a Webull account and get up to 20 fractional shares for free. Guys, that is free money. Go get that free money, guys. And thank you so much for being here, and see you on the next one. Josh out. Peace.